What is swing trading? In the fast-paced world of finance, swing trading has emerged as a popular trading strategy. Let's dive into the basics of swing trading in this 3-minute video. Swing trading is a trading style that aims to capture short to medium-term price movements in financial markets, such as stocks, currencies, or commodities. Unlike long-term investing, swing traders typically hold their positions for a few days to several weeks. Swing traders rely on technical analysis, which involves studying historical price patterns and indicators to identify potential trading opportunities. They look for stocks or assets that are in an uptrend or downtrend and aim to profit from these price swings. In an uptrend, swing traders might enter a long position when they anticipate a stock's price to continue rising. They ride the upward momentum until they believe it's about to reverse. Conversely, during a downtrend, swing traders may enter short positions, betting on the price to continue falling. There are various swing trading strategies that traders employ. One common approach is trend following, where traders ride the trend until it shows signs of exhaustion or reversal. They use technical indicators like moving averages, MACD, or relative strength index, RSI, to identify potential entry and exit points. Another strategy is breakout trading. Swing traders look for stocks that have been consolidating within a range and then break out of that range with increased volume. This indicates a potential shift in momentum, and swing traders aim to capture the subsequent price movement. Effective risk management is crucial in swing trading. Traders often use stop-loss orders to limit potential losses and protect their capital. They set predetermined price levels at which they will exit a trade if the market moves against them. This helps manage risk and protect profits. It's important to note that swing trading requires active monitoring of positions and market conditions. Traders keep a close eye on their trades, adjusting their strategies if necessary based on changing market dynamics. In conclusion, swing trading is a trading style that aims to capture short to medium-term price movements by utilizing technical analysis. It offers potential opportunities for traders to profit from market swings. However, like any trading strategy, it comes with risks, and it's important to conduct thorough research and practice sound risk management. Happy trading! Thank you.